I'll give it about another minute and then I'll start my little spiel. All right.
Okay. Um, I guess I'm ready.
All right, sounds good. We're relaxed here. Okay, I'm gonna go ahead and start the recording and then I'll start with the introduction. Okay, perfect. Welcome everybody. All right, let me start recording. Hi everybody. Hello. Welcome. It is March. Already 3 months into 2026. I feel like it was just yesterday that I was saying that about 2025. I am Rachel Vasquez, and I'm delighted to welcome you here as your host for today's Business Intensive Workshop. I am a senior partner here at the Wellness Universe, the founder of Living Beyond Grief, a grief to resilience expert, transformational speaker, and my real work is rooted in helping others move through challenges into their clarity, strength, and meaningful growth. However, alongside with that, I am deeply passionate about empowering transformative business owners, equipping them with the tools and strategy, confidence needed to expand their reach. Because it is us, the entrepreneurs, the wellnesspreneurs, the solopreneurs, that are extending our healing hands across the globe. And our impact is so great. So, to help us build our businesses so that we can be truly successful, the Wellness Universe is committed to providing resources, experiences that are both aligned and effective tools that we fully endorse because they support the real growth and sustainability and integrity of businesses. So, in today's collaborative experience, I am honored to be joined by Janine. Now, each month, these intensive business workshops bring together expertise, insight, and practical growth. So, they're designed to help your businesses move forward with clarity, momentum, being able to scale and support your businesses in all different ways. Okay, so this month we are going to learn, and coming right on next month is tax season. If you're like me, and hopefully you're not, uh, you are scrambling right now trying to figure out your tax situation. I actually still have to do last year's taxes, so I'm still trying to get my ducks aligned. And this is about legally reduce your taxes by 30 to 70% with Janine Jennings here. She is a tax strategist, wealth architect, and legacy builder with 25 years of experience helping high earners, entrepreneurs transform their financial lives. And as the CEO of JP Tax Services and Accounting, she specializes in advanced IRS code strategy, real estate tax planning, business structuring, and the legacy wealth systems. So that sounds fantastic and something we need. Hi, Janine. Come on in and introduce yourself.
That notebook. Hi, I am Janine Jennings. Hi, everybody. Thank you for joining us. I appreciate it so much. And I hope you all are having a great Wednesday. Um, as I say to a lot of people, Grand Rising Quintillionaires, because I want everybody to be a quintillionaire. And yeah, it is going to be great. I have been an entrepreneur since I have been I had my first business technically in first grade. I did hair. I always knew I wanted to be a hairstylist in first grade, and so that's what I did. And then in fifth grade, I started a candy business. And I knew which candies sold well. I knew how to make a profit from the candies that I sold. And then I would take out money from what I made and buy more inventory so I can have it for the next week. And it was very profitable. Like the whole school, teachers, principals would buy from me, and I was like, oh, okay. And then when I look back, I'm like, how did I even figure out how to do that? That was insane, but it was great. And then in eighth grade, from eighth grade to 12th grade, I had a paper route, and I used to make buku money, more money than a teenager could ever even imagine. It was crazy, it was wild. So I have known about money, about strategies, about sales and marketing for a very long time, and I started to apply those strategies for myself to see if they worked, and then I applied them to my clients, and they work very well, and my clients are very happy.
I am so excited, and today's session is so needed among business owners and everyone day to day, but especially with tax codes always changing and people just kind of get stuck around this topic. So I feel so grateful to have you here today. I'm going to go ahead and hop off and let you get started. If anyone has questions, please feel free to put them in the chat. This is recorded for evergreen content. So if you do have any personal questions that you don't want to ask that will be recorded on our live recording, please feel free to wait till the end. And as soon as I turn off the recording, you can feel free to ask those as well. All right. Perfect. Well, welcome, welcome, welcome.
Welcome, welcome. Where is everybody from? I'm from
here in the Pacific Northwest. Where's everybody else from? Let's see. Oh, Monterey Bay, California, Minnesota. We got all different types of weather going on, I can see. Virginia, Texas. Yeah, we are. We got the country covered.
Yes, I'm Cleveland, Ohio. Cleveland, Ohio.
Yeah. Danville, California. Beautiful.
Yes. Welcome, welcome, everybody. Welcome. All right. So, as one may not think, taxes are power. Taxes are not paperwork. Taxes are power. And the moment you understand that, your financial life changes. Most entrepreneurs spend their life trying to make more money. But the wealthiest people that I've worked with over the last 25 years didn't just earn more, they structured their income differently. And structure determines how much of your money you get to keep. Again, my name is Janine Jennings, and my mission is simple. We make people look good in life and on paper. So most entrepreneurs focus on revenue, and they ask, how can I make more money? But the real question is that wealthy people ask themselves is, how can I keep more money that I already make? And that's the goal, is to be able to keep more, because you're spending a lot, you're making a lot, you're spending a lot, but you need to keep more. And that's how wealth is built. In one of the ways wealth is built. Okay? You are not really taxed on what you earn. You're taxed on what's left over after your strategy. Okay? So that means the difference between someone paying 40% in taxes or someone paying 15% in taxes often has nothing to do with income. It has everything to do with structure and strategy. So you've heard of billionaires only paying, after it's said and done, $750 in taxes. Well, that's because they had a strategy, and they know how to use the IRS code book and IRS laws to their advantage. The IRS has pretty much two tax systems, which is one for W-2 wage earners, and then the second one is for business owners, and the second one is the most advantageous, which is for business owners. Okay, it's always great to be in business. Always have a business, even if you have a W-2 income. It's always great to have a business, because it's more advantageous for you to keep more of your money. Now, when entrepreneurs struggle with taxes, the real problem usually falls within four categories: weak margins, the wrong entity, no tax planning, or no strategy for shifting income. Okay? So if you're paying more in taxes, it's one of those four areas that you fall in that needs to be corrected. Okay? So what you'll learn today is how tax brackets actually work, how entity structure changes everything, and which IRS codes wealthy entrepreneurs use legally. And then I will show you a real tax return example so you can see how it's advantageous to have an S Corp as opposed to just having an LLC. An S Corp, and meaning S Corp is a legal designation or with the IRS that you're taxed differently, okay? And as is if you are with just a single member LLC. All right, you'll see the example. Now, I've seen people making 80,000 pay less in taxes than people making 300,000. Why? Because strategy beats income. Now, for your tax brackets, let me show you what the tax brackets are. One moment, I'll keep, once I pull it up, I'll show you all what the tax brackets are. Now, because most people misunderstand how it works, they feel if you make 100,000, 300,000, 500,000, that everything is taxed at a higher tax rate, but that's not true. You're taxed in layers, and tax brackets are like stairs. Each portion of income is taxed at a different level. You do not pay the highest tax bracket on all of your money, okay? So there are two different filing status really where they have the same income, but this is where the structure matters. So forgive me 1 second.
Yeah, you're totally fine. I was just gonna come on and say, oh my gosh, it's so true because I had no idea about taxes at like how any of that worked my first year, 2 years. I still don't really, but my first couple of years in business. And I just thought, oh, okay, so say I made, $10,000, but I had $11,000 in expenses. I'm like, I should be getting a refund. And I didn't know that that's not how that works. So, oh, I'm just so grateful for the education today, for sure.
Yes, yes. Okay, let's see where this is. Okay, can you see that? Strategy beats income?
Yep, we got it.
Okay. So structure determines how much money you keep. Now for 2026, meaning it's for the 2025 tax year, married filing joint, standard deduction is $31,500. Single is $15,750. And these are the for single tax brackets. Your 0 to 12,400 is taxed at 10%. 12% is from 12,401 to 50,400. 22% is taxed at from 50,401 to 105,700. And 24% is taxed from 105,701 to 201,775. Okay. And so for married filing jointly, tax brackets. 10% is taxed from 0 to 24,800. 12% is taxed at 24,801 to 100,800. And 22% is taxed at 100,801 to 211,400. So I don't know why I didn't say it. $211,400. So, if you, for example, if you make $100,000, your $100,000 if you're single and you have the standard deduction of $15,750, your taxable income is $84,250. Now, since this is layered, 10% is of that income is $1,240. 12% of the income is $4,560, and 22% of that income is $7,447. So total federal tax that is due is $13,247, which is makes you at an effective tax rate of 13.2%. Now, with the same 100,000 for married filing joint, the standard deduction is $31,500. And after you minus the $31,500 from 100,000, I don't know if you all knew that, but what's taxable is $68,500. So the layered tax effect is 10% is taxed at, and that tax is $2,480, and 12% of that money is $5,244. So in total, your federal tax due is $7,724, which is less than the single filing standard filer, and your effective tax rate now is 7.7%. So if you want more money, you have to have a plan. There's no question about it. So you have to, if you say you want to make $100 million in a year, well, what's your plan? Because the plan is going to get you to where you want to go instead of just you saying it. Because you have to know how you're going to be taxed throughout the whole process. Now, what I've seen from a lot of entrepreneurs is that they're not pricing or business owners, they're not pricing their service and products correctly. Maybe they're going with what is in the market or what's customary to what they see, do a little bit of due diligence, but they need to price for profit. And how you get the number for your gross margin of your service and product is your revenue, what your product costs or service costs, minus the cost of you being able to provide the service or product, and divided by the cost of the service or product. Okay. So this is an example. If you always want 80% gross profit margin, always, because that means you're in the profit. Anything below 80%, you're losing money. And so you need to audit your service and products to see which service and products are 80% and above. And if they're below 80%, you need to figure out what you can do to raise your prices or the product cost so you can hit that 80% and above gross profit margin. So if you have a service that's $100 and it costs you $5.06 to deliver that service, you are at a 94.94 gross profit margin. Now let's do another example. This is how you calculate, let's say, the different items that it takes for you to deliver a service. Let's say a massage. You need massage oil. This is how you calculate each thing that you use to deliver your service, and massage oil, $30 for a 32-ounce bottle. And let's assume that you use 1 ounce per service. So I know you all have realized that when you go to, let's say, Chipotle, they have these measuring cups. Well, they've measured meticulously what it takes to complete a bowl. And if they go over that measuring, that's when they start to lose money. That's when in Chipotle, they look at you kind of brutally if you ask for another scoop. Oh, can I have another scoop? Oh, that's going to charge, that's going to be extra. So they're meticulous. Everything like McDonald's, if they're making a sandwich, they know how much it takes, how much they want to use for ketchup, for mustard and pickles and onions and all of that. So everything has been measured meticulously so they can have a low cost of goods sold, so they can stay in a 80% or more gross profit margin. Okay, so how do you determine the cost per ounce? Is $30 divided by 32 ounces, and that's 93 cents per ounce. And you want to use 1 ounce of massage oil, maybe per section of body. Don't know how useful that is, but this is an example. So the total cost to provide the massage oil is 93 cents. Now you have to buy hot stones for that massage and sheets. Let's say that's $430. And the total cost for those tools are 43 cents. So to pull it all together, your total cost of goods sold to deliver a massage is $1.36. And then you divide it by your cost of your service. So you're in the $73 73% gross profit margin. So you need to figure out how you can raise that to 80%, which would mean you need to raise your prices. Every decision that you make, numbers give you clarity, and the more you measure how much money you're making, the more you manage. So knowing how much you're making on a daily and weekly and monthly basis are important. You need to have a bookkeeping system, whether that be by hand, whether that be in Excel, or whether that be using QuickBooks or in a bookkeeping software. You need to know, because you cannot grow if you don't know what you're making, and you cannot make more if you don't know how to forecast of what you have been making. Okay, is this making sense to anybody? And do I need to, are there any questions?
Yeah, I mean, it's really strange because, well, it's not strange. It shows my uneducated mindset when it comes to like that pricing. And here I'm just like, oh, that price sounds great, and I just put it out there. I have no idea what I'm putting in, on a monthly basis into like furthering my licensing costs or my certification costs, or if I take a new class or buy a new tool to use for my business. I've never calculated that into my pricing costs. So that is that's certainly eye opening for me, anyways.
Yeah.
If anybody has any other questions too, just please put them in the chat, and I will make sure to let Janine know.
Okay. I just want to make sure I'm on track and helping you all just kind of understand, because this is a lot of information to take in. And just being an entrepreneur, you just don't know. Like, since I started doing hair in first grade, I just would do it, and just give me $10. But of course, you can't make a profit off of that. You can't live off of that. But you're young anyway. I was young anyway, so it didn't matter. I didn't have any real expenses. So, um, now profit margins matter because that way you can grow your money and then you can know how to use that money to invest in other things, because you can't work your way to wealth. You have to invest it. And if you're able to keep more money, you can invest that more into passive um, generating activities. Okay. Now, I know a lot of people get confused on what is a profit and loss statement and what is an income statement. Profit and loss, basically, in my general terms, this is just the easy way to understand it, is what they used to use back in the day, and more financial people like banks, or you're trying to get a loan or investing, they'll want to know what an income statement. So that's more a business term. Profit and term is the more of a general term. Income statement is a business term, but they both mean the same thing. They're not different. It's the same thing.
I have a question that's come in. If you could share an example of COGs for a consulting service.
Okay. So consulting service, what do you consult on?
I think management consulting.
Okay. So management consulting, so managing a business. So you would do, let's go back. You would do how much it costs you to provide the service. So what you charge. So say you charge $1,000 for a consulting fee, okay? And then you piece together, what does it take you to deliver that consulting service, okay? So it's maybe your hour of time. How, if you had to put how much you made an hour, what would that be? Then, I don't know, your computer software, you would break that down. If you paid $500 for your computer software times, let's see how many clients it can divide it by. $500 divided by how many times you can use that computer software. So let's say 2,000. So can anybody, 500 divided by $2,000, 2,000 times equals 0.25. So it costs you 25 cents to deliver that service. And say for your hour of time, let's say $50, for example. So $50 plus 25 cents, so that's $50.25 that it cost you to produce that service. So, and if your service is $1,000 divided by $50.25, that's a 19% profit margin. You need to raise that price. Did that make sense?
We got a yes.
Yes, okay.
Thumbs up.
Okay. All right. Now, I came up with a STAR method where your structure added with your tax strategy, added with asset building, added retention, helps you keep more money. Okay? Well, you're welcome. You're welcome. Now, with an S Corp, it is generally, everybody's an LLC. And anyone who has an S Corp is an LLC. S Corp is only what an IRS designation, okay? So you move to being an S Corp when you are profiting $50,000 or more consistently in your business. And the reason why you would want to do an S Corp, because you save on self-employment taxes, okay? Self-employment taxes are 15.3%. And let me show you an example of what it looks like for an S Corp return. Um, let's see. All right, I'm gonna stop sharing and then reshare. Can everybody see this? Is this?
Yes, and if you want it to be a little bit bigger, just to the right, there are directional arrows. So if you do that, it will take up the whole screen, and you can see it a little bit better.
Is that better?
Yeah, I can see the whole. I can see the whole thing.
Okay. Do you all need me to make this bigger?
If they expand it out, they should be able to see.
Okay. All right. So this is an S Corp return for 2025. You have the date you have to apply for S Corp election. There are two forms that you need to apply for S Corp election, which are 2553 and 8832. And you submit a form and send it to the IRS asking to be looked at, to be taxed at an S Corp level, okay? And so wealth is your birthright is your business. You have your EIN number, of course that's sample. So now this business has made $1 million, 247,000. With the advantage is you can pay yourself 150,000 and not have to pay tax on that. And with an S Corp, you have to pay yourself a reasonable wage. And so this is the only thing where you have to pay payroll taxes. So you can save on self-employment taxes, and you'll see in the next example what that looks like, saving on payroll taxes. And you have your regular expenses. You had to return some money to someone, or you couldn't collect on a service. This is your rents, using the Augusta rule, which you'll see later. This is depreciation from a truck. And all in all, your leftover income is $143,000, okay? And $942. If I switch. Now, on a regular high earner salary, a W-2 salary, this is someone who makes $407,441. Can you all see that?
Yeah, I can see that on that line.
Okay. This person had a bit of interest from their bank account, and this is their adjusted gross income, $409,342. $409,342. Since they are single, they had a higher standard deduction because normally the standard deduction is $15,750. But they paid more, they elected in their W-4 to pay an extra $500 per paycheck. And so they paid a lot more in their Medicare wages, which was $24,922. So that was their standard deduction. So you take this $24,922, you minus it from the $409,342, which is left over. This is your taxable income, okay? And in her paycheck, she paid into federal $119,727. And the extra she paid into Medicare, which is $262, that meant her total tax payments were $121,789. So you take this number, your federal tax payments, and minus it from this number, which is your total tax due. And so since she had paid that extra $500, she happened to get a $15,000 refund. That's not typical for someone who makes a high wage, but that's all she wanted to do. She's a doctor. She just wanted to do her job, not do anything to lower her taxable income, because time is more valuable than money. Is that making sense to you all?
I think for me, in theory, it can make sense. And I would say too is if you're trying to create other strategies to get that taxable income lower, is that like where deductions then come in, like maybe your office space or things like that, that will kind of start to bring that that chunk down, or how does that?
That's a good question.
Oh, and then we do have another. Yeah, and then we also have another question, just however you want to work it in. It says, question on 1120S. What is the difference between line 7 and line 8?
Let's see. Line 7. So, compensation of your officers. You're an officer of your company. And that's what they call a distribution. You're not taxed on that. That's the advantage of having an S corp, because you can take distributions tax free, and then the clause for having an S corp says that you have to have a salary. So you pay yourself a reasonable wage. And so taking this salary, you're just being in compliance of having the S corp. Because you can't just take all distributions and no reasonable wage. So even if you just wanted to take a $2,000 reasonable wage, you've supplied the compliance. Does that make sense?
Yes, she says, let's see. I didn't know that distributions were not taxable. I've been paying tax on it.
Your distributions or your payroll? Because distributions, if you include them in your S corp, that's not taxed, because there's no tax due. Down here, there's no tax due. I can take a look and see what's going on, but there's no tax due. The only tax that would have to be paid is this payroll tax from this S corp, because that's how you stay in compliance. S corps, C corps, partnerships are due. Also, let me state that are due by March 15th of every year. And if you want to apply for S corp election, you need to do that by March 15th. Now, you can also apply for a late election S corp to be looked at to be granted an S corp status after March 15th, but that's where the 2553 and the 8832 come in. You have to ask for grievance, if you will. And to answer your...
She said she's going to reach out to you. That's really great. Thank you.
Okay. Now, for this example, for a high wage earner, there's really nothing she could do to lower her taxable income other than have a business. That's where I said there's two tax systems, one for the wage earners and one for the business owners. The business owners and wage earners are the most advantageous because you get to lower your taxable income. There's she's just stuck at what she's paying into federal in a sense. And she makes too much money to have maybe put in to be looked at to have a Roth IRA to contribute to Roth IRA, because a Roth IRA you can make up to 105,000 and you're allowed to contribute to a Roth IRA. Anything over 105,000, you can't. You're not supposed to. I mean, people do what they want, but you're not supposed to contribute to a Roth IRA. You would have to move to a traditional IRA. And Roth IRAs.
And then,
go ahead.
I was going to say, so in this example, line 7 distributions is not taxable. Line 8 salary is taxable payroll tax.
Yeah, because you have to pay payroll taxes on that money because you have to generate a W-2.
Perfect, got it.
Now, when you have an S corp, when you have an S corp, you generate a K1, which that K1 goes on your personal return. So this is the business section of the return, and then the K1 is for your personal section of your return. And let me see which one that is. Okay, so this is a single person K1 personal return. All right, so that 143,000 is what your total income is, and you have that's what your adjusted gross income is. So you're paying tax on $143,942 with a single standard deduction. Now you would take that $15,750, minus it from the $143,942, and this is what is taxable: $128,192. And the tax on $128,192 is $23,613. Now, mind you, see how when you're S corp, you bypass self-employment tax, and that's where this line is. So now, say this same person made $1 million, but they're not an S corp, and they just used their LLC. All right, same person, single filer, just an LLC. They are not an S corp. Let's see, can I make this bigger? Oops. Okay. I hope that helped y'all. So now this half of self-employment is tax deductible, and this is where this $10,169 comes in. And so your adjusted gross income is $133,773. Single standard deduction. Now you do get, with just having an LLC, you do get a qualified business income deduction, which is the $23,605. So you add these two together, which gives you your standard deduction of $39,355. That gets minused from $133,773, which now your taxable income is $94,418, and this is what your taxable income is. The tax on $94,418 is $15,688. That's your tax, but you didn't pay into any taxes. into any federal. So now you add, this is where your self-employment tax is, gets added to your tax due. And so now your total tax due is $36,026. And so you get a penalty for not paying into estimated taxes. And so now your whole tax due is $37,441. Now, do you see how you saved on self-employment taxes being a S Corp as opposed to just running an LLC? Is that making sense for everybody?
Yeah, and my question is, with an S corp, is there is there a minimum amount of other employees that you need to be employing, or how does that work?
No, there's no minimum of employees. Now, when it comes to shareholders, you can only have 99 shareholders. Most public companies that are publicly traded, are C Corps because you can have more than 100 or more shareholders. That's why they are C Corps, because they have a lot of shareholders. Now, you can move from S Corp to C Corp, but you can't move from C Corp to S Corp. So people start here, and then when their business is growing and then they want to become publicly traded, they move to a C Corp so they can have more investors or shareholders. Is that helping anybody?
No, that totally makes sense. And then if somebody is just starting out in their business, so say for example they're still working like a 9 to 5 and they're transitioning into becoming an entrepreneur and they're trying to build up that business income, would it be better to start out, is that when you start out as like the LLC before you start making those bigger jumps into like an S corp?
Wait, say that again. Say that again.
Or can you just start in doing like an S corp, or how do you make those, bridging that gap when you're juggling multiple businesses, or I mean a regular W-2 business, and then you're trying to start and build your own business?
Well, that's a good question. So when you're starting out, you start out as an LLC, and once you're able to profit from your business, 50,000 or more, that's when it's just advantageous. Is at 50,000, that's the benchmark. Now, if you're profiting 100,000 or 200,000, yes, when you file that tax return, apply to be an S corp right then and there. Like, say if it's your first time in and bam, you've made 100,000, you can apply to be an S corp.
Okay, that's great to know. So that $50,000 a year mark is kind of the standard of when you should be moving your business into the next level, into an S corp.
Yes.
Perfect.
Yes. Because if the IRS, if you're just new and I don't see, anyone can apply even if they haven't done 50,000 and see what the IRS says, because it's their discretion. I can't say you won't get picked if you're at 43,500. You can apply. But I would do it when you're, making a higher net profit. Net profit, net income are one and the same word, like profit and loss and income statement. And so, does anybody have any other questions? What questions can I answer? Thank you for the thumbs up. I appreciate that.
I don't see any other addition. Oh, maybe somebody's coming in. Something. Typing in.
Hi, everybody.
Oh, we just have a lot of gratitude coming in for this. So
Okay.
I think everybody understands where we're at thus far.
Okay. Okay. Now, when you are a business owner, you need to put some type of strategy in place to kind of forecast what you're going to be making for the year. So that way you know which strategy to put in place. So by the end of the year, you know you've lowered your taxable income, you're not paying as much tax, and tax time is not a surprise. I talked with a client a couple days ago, and she had just started her business as a carpentry business, and she was just a little frustrated because she didn't know what to deduct. She didn't make a lot of money. She knows she had a loss in the business, and she didn't know how that was going to work for her because she did work part-time. And by the end of the call, she was like, you know what, you just calmed me down so much. I said, you know, I take the scary out of taxes. And I thought that was kind of brilliant at that moment because I really like taxes. Like, I like figuring out how to save that person some money because I've used it on myself for a gazillion years. So I know if you have some sort of forecast and knowing of how much you're going to make, and pretty much a simple way to kind of forecast how much you're going to make is knowing how much you pay a month in bills. How much are your bills per month? And if you know your bills run $5,000 a month, well, you know that's $60,000 a year. You're at least going to make that, at least. So if you're going to at least make 60,000, what can you do to strategize to not pay all that money on taxes on that 60,000? Is that making sense for everyone?
Yes, and we did have a question of if you are an LLC, what strategies are there to lower taxable income?
Good question. That's the next slide. Okay. All right, let me share my screen. Okay, so there's a couple tax strategies you can use, and they're all legal IRS-based deductions and elections, okay? You can buy real estate in retirement accounts, like having a multifamily real estate. That's a huge deduction because you can take depreciation from that, and you can get a cost segregation and dramatically lower your taxable income. You can contribute to retirement accounts such as a Roth IRA, so that way you can apply that contribution credit, or what they call a saver's credit, to your tax return. You can also contribute to an HSA. A lot of people don't know that. That's a hidden gem. Contribute to an HSA so you can lower your taxable income. And with those, you get to keep your wealth, and that's how you build your legacy. Control over tax changes, W-2 versus self-employed. I had already showed an example of that within the tax returns. You're taxed at 15.3% for self-employment tax. There's I went over the different LLC types: S Corp, C Corp, and regular LLC. Why This is where S Corps matter. You split the salary and the distributions. Now, this is one strategy, the Augusta Rule. The Augusta Rule was developed in Augusta, Georgia, towards the golf outing, the PGA, because I think they hold that there a lot back in the day whenever this rule was. I don't remember the date of when the rule was adopted, but you can rent your home for 14 days or less to your business at a fair market rate. For example, if rent in your state, I'll say for Ohio, rent in Ohio, standard $2,800. So what I would do is pick 14 times out of the calendar, write a rent receipt, and for $2,800 times 14, let's see what that is. That's $39,200 I get to write off free and clear, don't have to pay taxes on it, off of my taxable income. Is that making sense to you all?
I could rent that out to an adult child in the home. I don't know.
No, well, technically, if you rent it out to the adult child, you would have to pay taxes on that because they would consider that rental income. But if your business, said business, say JP Tax Service, rented from Janine Jennings, that's not taxable.
Okay. Got you. Oh, that makes sense. Oh, that's great.
So it's your business renting from you, the person. And it has to be 14 days or less. So pretty much we all do our accounting work at least 12 times out of the year, and maybe two additional times could be on a family vacation where your family is your board members. If you do not have your board members set up and in an operating agreement, I highly suggest you have that done. It could be your 4-year-old son and your 12-year-old daughter with your grandparents and your parents on your board. It doesn't have to be, peers or business owners. It could just be your family. And then that way you get to write off your travel, you get to write off your meals, you get to use this strategy fairly and legitimately. So for the rent receipt example, you have to have the date, the business meeting, the address, the amount, and you sign it. Second strategy is paying your children 18 and under. Has to be 18 and under, where you can pay them up to the single standard deduction, which is $15,750, and you don't have to pay taxes on them. And your children don't have to pay taxes on that money. So what you would do is you create a notebook on you paying your children what they do for you in your business, and you put it in an account for them. Maybe you tell them about the account, or maybe you don't. And you use that money that you're paying for them, maybe to pay for certain items of that extracurricular activities, or shoes or clothes or something, where it's all a circle and it's an advantage where you're paying your children.
So like when we were joking around right before we came on and started the recording about how your son was helping you with tech support, my son helps me with my tech support. things like that, which is a constant in my home. My daughter helps me with my social media, that type of thing. And so I did have somebody, two questions coming in.
Uh-huh.
Does the ADESPA rule apply nationwide? So, like
Yes,
in every state?
in every state.
And can you pay grandchildren?
There is a way to pay grandchildren. I don't have that right in front of me just yet, but there is a way to pay grandchildren. Yes, I know that for a fact.
Okay, and then what about too if your grandchildren live in your home? I guess that would be like if they're considered a dependent, and that may not be your circumstance, Lee. I'm just curious. If you're claiming your grandchildren because they live with you, for example, I wonder if you could then pay them. That's a consideration.
That is a consideration, yes. Now, when you income shift like that, so that's what they call income shifting, is just lowering your taxable income so you can keep more money for your family income, okay? Because that's the whole point. Like, what are you doing all of this for? If it's not for a better peace of mind. I mean, we all have to retire. We won't be working until, I don't know, maybe somebody will be working at 90. I'm not sure. I can't say. I mean, I like doing this. I'll probably retire from doing taxes about 90. So, but it's for a better life, I'll definitely have a suntan somewhere and just be doing taxes, sipping pineapple juice. All right. Also another third strategy is the HSA. You can contribute to the HSA, and then that way it grows tax deferred, and you can pull that money out too. I mean, it grows, yeah, tax deferred, and you can pull that money out to use to your advantage. There's quite a bit of items. I can't think of the word that I want to use. Quite a bit of things that you can pull the HSA money out and use for your advantage. Is that making sense?
Yeah, because I feel like I didn't know that I could contribute in that way at all. I thought I had to work for a company before I could take advantage of any type of health savings account.
Oh, no,
And
no,
someone else had asked,
no, you could do that. The contributions are tax deductible, and the money does grow tax free, like I said. And the money that you withdraw for medical expenses are also tax free. So if you needed glasses, if you needed a minor surgery, if you needed whatever you might have needed medically, you can pull that out tax free.
and you can also set that money aside, say if you have dependents in the household.
Absolutely.
Okay. And somebody else asked if I can add my husband as an employee or receive distributions.
You can add your husband as an employee. Now, is he a I can't think of the word. Does he own part of the business or no?
She says no.
Okay. So yes, you can add your husband as an employee, and that is a tax advantage. I have a client who is, it's a husband and wife. They have a trucking business, and she is an employee on the company, No, wait. It's more advantageous for the woman to be own the company because women, they call us some sort of a minority, like women's advantage, and we can get contracts if women own the company. And so I think she's the owner, her husband works in the company, and it is very advantageous for them in their trucking company. And they do have an S corp. I helped them apply for the S corp back in December. So you can apply for S corp election, because when they called me for a consultation, I asked them a variety of questions. And they were making a high wage, a few $100,000, and I said, well, why are you all not an S corp? And she said, well, we didn't know. Some people don't know, and that's fine. And so um, I helped them apply for that election, and it takes a few months to be accepted, but I'm sure it's March. They should have some type of notification now that they've been accepted as an S corp. Did that answer your question?
Wow. Yeah, and then she also said, although we are married, filing jointly.
Oh, so that's very tax advantage. That's a great tax advantage. Do you all have children too?
I believe adult children not living in the home, Leah, is that right? Yeah, adult children, correct. Yeah.
Okay. All right. Okay. Now, also too, the HSA can become a medical retirement account, meaning that, when you get older, you kind of have to go to the doctor a little bit more sometimes in some instances. And so your medical withdrawals for medical are free. And if you have a non-medical withdrawal, it's just taxed as income. So you can withdraw your money, and it doesn't have to be medical, it's just taxed as income. But the fact that it grows tax-free is the benefit. All right, I gave a profit example of, well, the profit example was 143,000, but that's the self-employment tax on 180. And you saw how payroll, if you're an S corp, payroll tax, you have to pay payroll tax on the amount of income of your W-2. So in the later example, when I said a husband and wife, they have a trucking company, I made them a W-2. He wanted to make 80,000 for his W-2, and she made 3,000 for her W-2. So you can pick what wage you want, or what they call a salary, and they only do a W-2 once a year. You don't have to do payroll taxes every month and have a W-2 every month. You can just do once in December and be done with it and pay a little bit of payroll tax on the money that you put on your W-2. I have a client, they have a flooring company, and their W-2 was only $1,000. They just wanted $1,000 as their W-2. That's a reasonable wage. You determine what your reasonable wage is, because that's what the law says, a reasonable wage. So now, if you add this triple strategy, the Augusta rule, the HSA, and the child payroll, you can easily save 30,000 or more, easily. And what's an extra 30,000 in your pocket? Now you have money to buy an asset, which is your rental property, and passive investments, a REIT, things of that nature. That's where you're going to get financial freedom. Financial freedom comes from where your passive income surpasses your monthly expenses. Okay, I have a t-shirt to give away. How many days can you rent your home to yourself using the Augusta rule?
Jeanette jumped in at 14.
Ding, 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 ding. Yes, 14. Okay. Yes, correct. I owe you a t-shirt. I can get a t-shirt. It's a JP Tax Service t-shirt. Let me get that for you. I'll show it to you in a second. Let me have my son bring me the t-shirt. All right. Does anybody have any questions from what I've said right now?
Gosh, it's crazy because this has brought a lot of clarity for me, and like I said, I'm behind in my taxes, and also a lot of anxiety. It's just like, oh no. It's more of the realization of doing things incorrectly. So now I need to make that shift and kind of like put myself in alignment, really trying to figure out, especially if you haven't had the strategy in place. And I'm thinking back for the taxes that I still have to do, and I go, oh man, I don't know what that's gonna look like.
You're welcome, Jeanette. I know. Well, don't beat yourself up. You don't know what you didn't know. It's okay because now a strategy can be in place now. It's just March. Now you have time to really utilize the strategies and really make it count for you in your business and your family life. And I want to pose this question. Like, first you need to decide when you're going to retire and then kind of work backwards. And so when you retire, how much money will you need? You need to figure that out. And there is a calculation for that. Can you please walk through the Schedule K on your Schedule K? Okay, the K1? Okay, is that what you meant, K1?
Schedule K on your 1120F. Yes.
Oh, okay, K1, all right. Let me show that to you. But as I was saying, you kind of need to figure out what you're going to need in retirement. And so now, if you know right now today what you need in retirement, you'll know how much money you kind of need for those years for retirement to lead up to that. And so if the numbers create the quality of life for you, the quality of your life equals the quality of your decisions. No, the quality of your decisions equals the quality of your life. The quality of your life equals the quality of your decisions. If you don't have any information, then how can you make a real important decision? You have to have key information. That's how businesses are being able to scale, is because they have a lot of information, a lot of numbers to know what works, what doesn't work, what prices are good. If you're on your pricing scale, if you have consulting services, if you provide a service, if your gross profit margin isn't 80% and above, you need to figure out, do I need to keep this service or do I just need to raise the price? And people will pay. Don't be scared to raise your price and maybe lose customers, which maybe a few people might lose, but you will find people that are willing to pay. Because if they can pay $1,500 for a Tiffany's paperclip, they'll pay for you. They'll pay for you.
I love that example. Oh, I love that.
I mean, how much is a Kelly bag? 30,000, 40,000? They'll pay for you.
saw a $5,000 fanny pack. Oh, but it's called a belt bag now, so I guess.
Oh, belt bag. Oh, I still call it a fanny pack. I still call it a fanny pack. Okay, let me show you the K1. All right. All right. Let's scroll down to the K1. This is going kind of slow, but okay. I hope I was able to help somebody today.
Yes, and also, do you
Airbnb in Mexico. They live in Wyoming, and it's three of them. And so they all get a K1, but it says 1065 because they're in a partnership. So your company name goes here, EIN, how many shares that you have in your company. You don't have to have had any, but generally people can have 100 or more. This is where your name goes and your social, and you allocate percentage of the shares, your 100%. And this is the ordinary business income. This is your profit. If it was a negative, if you had a loss, this would be a negative number. Is that helping you? And this is just a statement of K1. Now I can show you what it is that you can deduct on your taxes. These are the items that you're allowed to deduct. So line 7 does not go on the K1. No, it doesn't. That's why it's not taxable. Okay, let me show.
one thing while you're pulling that up is, so say that your business is starting out and you're not making, like really what would qualify as a livable wage or whatever quite yet, but you made an investment or you purchased equipment or whatever, say for $20,000. How long can you use that $20,000 against, I mean, as a deduction? Is it only go for that 1 year? So say you didn't profit anything, you were negative, obviously you wouldn't, the $20,000 that you spent on the equipment wouldn't be helpful. So
Well,
I don't know if that makes sense.
it does. You're asking what they call startup costs. So if that is part of $20,000 is your total startup cost, that would be depreciated over 5 years.
Okay, perfect.
So that's about what, 4,000 a year that you would use on top of the other expenses that you may have incurred. So all right, this is a form that I like to use for clients new. Did you materially participate in your business? Yes. And I like to know whether or not they need 1099s done. So these are all of the expenses that expenses, write-off, and deductions are the same word, or the same, they mean the same thing, different word, same meaning. Some people use expenses, some people use write-offs, some people use deductions. That's why I have it here, just because however somebody's been groomed to recognize the word for lowering the taxable income, I just use that. So you have advertising, any commissions and fees that you had and incurred, maybe bank fees or commissions on a joint venture or something that you had to pay. Contract labor is people who helped you, or independent contractors who helped you in your business. If you had employees and you had a benefit program, like maybe Legal Shield or something, put that there. Your insurance, which isn't health insurance, that goes somewhere else. Of course, everybody should have some sort of a business insurance for $20, $30. If you are in the consulting space, you have to have insurance because you want to protect yourself in the event of. If you have renter's insurance, homeowner's insurance, interest, mortgage interest, credit card interest, business loan. Interest. The interest on a business loan that you use for your business, you can write that off. Credit card that you use for your business, just the interest that you pay for the year, write that off. Legal, professional, tax prep fees. Any fees that you incurred to have for your profession, professional fees. As a hairstylist, there's fees that we have to, like continuing education or certain type of fees, legal fees. I recommend all entrepreneurs have Legal Shield because you need a lawyer in your back pocket to help you in the event of. Because you don't know what contracts you're signing and you want to be able to make it fair for you or make it fair for you and your business. So that way you know that everything is on the up and up, because somebody can steal your trademark or use information that you knew was privy just to you and they can repurpose it as their own and you can go after them. You know, you need that. And so office supplies, pension and profit sharing plans. Now, if any of these deductions do not apply to you, you don't put them, you don't use them. This is where your payroll, wages, taxes, and expenses go. Utilities are on the next page. Any meals that you used to get more business, here. Any, like if you DoorDash a client, they were sick and it was a little gift, like, hey, let me DoorDash you some soup, here. Your supplies, your repairs, if you rent a storage, an office, if you rent a house and you use one bedroom for your business, here, it goes here. Is this making sense to everybody? Does this help?
Yeah, that's great. And then, is this, the form that we can get, I mean, is it gonna?
Yes.
The PDF we were talking about? Okay,
Yes,
perfect.
yes, I can give you all this form. And then this is how you calculate your home office, what you're able to write off for your home office. Your home office is able to be deducted from your taxable income as long as you have a net profit. If you have a loss in your business, it won't count.
What about, is this home office in addition to, the rule where you can, rent the space out 14 days a month?
In addition to, yes.
Okay.
Okay. And
All right. It looks,
these
oh,
are the
somebody asked what Legal Shield is.
Legal Shield is a company where they offer a service where you have a I will send a link for that too, where
Perfect.
you have a lawyer you're able to talk to Monday through Friday from 9 to 5 p.m. in your state. They are hosted in all 50 states, and you pay a monthly fee to have contract reviews, to have client disputes. If a client owes you money, you call them and say, hey, this client owes me money and I need you to collect for me. They will collect and do the whole collection for you, all within a $50 membership fee. You can get your will prepared for free, and then you can get a trust done for $250, as opposed to $4,000 or $5,000 to prepare your trust, because your trust is that's how you own nothing and control everything. If I can leave you with one tip, take your name off of everything, your business, everything, because if somebody wants to sue you and your name isn't on anything and it's just your business, they can only sue the business. And then that's where you get savvy and having your intellectual property in different businesses and not in just one. So if you're 123 AB corporation, you don't have all of your intellectual property, your assets, your everything in there. They're hosted different with different LLCs. And always, always, always separate your money, your personal money, and your business bank account. Have a business bank account for every LLC that you may have, because you can have 10 LLCs, always have a business bank account. And when you're filing your taxes, use an account that you hardly ever use. A Chime, maybe a GoToBank. So that way, that account is the only one that's on record with the IRS, because you don't want them dipping into your personal account, because they can, and they hold the cards. They hold the cards. So, I mean, they can do what they want. And
what about can you deduct homeowner's insurance for a home office?
well, yeah, you have to protect that home. You have to protect the home against the event
All right.
and the event of, yes. Does this help anybody?
Yes. Oh my gosh. I feel, yeah, I was going to say, I feel like, if somebody says, I wish I would have talked to you before I paid separate legal fees for all these services.
Right.
I feel like we need to have you on for several different things, because this is like, okay, this is the overshadow of, and then we could go into a whole other class on so many of these things. It's really, it's crazy, and I feel like I have a lot of work I need to do. And I really want to connect with you. I know we had discussed that at the beginning. So if you have, we'll get your contact information too, or a way to contact you.
Yes.
I don't know if Leah has any of that information that, or anything to put in the chat.
Yes.
For people who are watching the replay, and we had some other people who had to leave for a meeting, but they're going to come back and watch the replay. So perfect. Whew. This is great stuff. I think you have been such an eye-opening. So, okay, great. I got your number.
And then if I can leave you with one, quintillionaire energy is what I came up with, where all of this strategy, all of this putting money into passive income, all of this getting paid through a trust has to equal financial freedom. And whatever that looks like for you, that looks like for you. But that's what the goal is for financial freedom, where you can be, do, have, and what you want. I'm an Aquarius at heart. I'm a textbook Aquarius, and I have freedom is so important to me. I don't like to be boxed in on anything. Like, my name starts with a J, a capital J. I don't even cross it because I don't want to be boxed in. Okay? So, I just like freedom. And
I love that. Leah has put your information and your LinkedIn, etc., and your website here. And if somebody wanted to connect with a consultation, do they just go through your website? Can we text you?
if they wanted to connect with a consultation, let me see, where is that? That's here. A tax
Okay.
clarity audit.
Okay, perfect. Well, I know what I'm doing after we close out of this. Does anyone have any other questions? I know that this time has flown by because we've had so many questions and we've gotten so much information. But this is your last chance.
Now, you can connect with me and I'll show you my quintillionaire energy personally. And because it's 4 boxes, so I wanted to be mindful of people's time. And we talked a lot. We learned a lot. And I hope everybody had a good time.
Yes, yes, yes. And so the tax clarity audit, 30-minute, jumped on me. Let's see. It was very helpful, great session, very helpful. So if anybody wants to connect, there's an estimated savings range, price $97. So read this information here, get on Janine's calendar. I know I'm going to do that right now. And because I need help, I feel like a Muppet on fire, running around, help, help.
You are
And I
welcome.
will yes, and I would love to invite you back, and then we can do like a extended part or focus in on one of these pillars.
Yeah, because
and go a little bit deeper with some of this stuff.
yeah, there's so much. There's so much. But I hope that helped everybody.
I have no idea. I'm a little scared about that.
It's okay.
Oh my goodness. Yes, yes. You just saying it's gonna be okay. It's all right.
It's
That
gonna be
helps
okay.
calm me because I'm like, oh, I'm up in my head right now. Like, I'm in trouble. Let's see here. And then, is there anything else that you wanted to touch on really quickly?
Well, I mean, let me see if I can. If this is this going to show backwards? Yeah, that's going to show backwards. How do I make it where it doesn't show backwards?
It does not show backwards for us.
Oh, it doesn't? Okay. So this is quintillionaire energy, where this is your trust. Everybody needs a living trust. Okay? You run everything from your trust. This is where your active income is, or what I call present. Okay? This is your W-2 or your LLC or DoorDash. This is where you make your money at, present day. And then that money gets paid to the trust, where then the trust pays for your everyday living, which it goes into buckets for your bills, taxes, and then assets or passive income. and then you take this money and you buy your passive income. And your passive income should surpass your everyday living, and that's when you've hit financial freedom, which is, this is financial freedom.
Wow. So in addition to your accountancy work that you can do, can people also work with you in the capacity of how to formulate one of these plans, or focus in on, hey, here's a good path for you. Right now, you should be focusing on obtaining another asset, such as a rental property or something like that. You know, that you can kind of help guide the forces of
Yes.
navigation of this
Yes.
type of flow.
Yes,
Perfect.
yes, they can. I like helping strategize this type of stuff for people to, you know, kind of create. You have to create the life that you want, and it comes from
Right. Yeah.
strategy.
I agree. It's also about, for me, needing to have systems in place, but not exactly knowing where to start, and that's where the strategy part comes in.
Right.
So it's, can't put a system into place if I don't have a strategy of to what type of system. So
Yes.
perfect. Yay. Well, thank you so much for your time, all of your information, answering our questions, and giving us a way to connect with you and get these things started out and settled out. I know that's, like I said, that's something that I'm looking forward to. And next month, April 1st, we're going to have Carol here. She's going to talk about how to look for and apply for book awards. So I've been in 3 books, and I didn't know that there was awards that you could that could go along with being not only a best-selling author, but you could be an award-winning best-selling author. So that'll be exciting as well. All right, I'm going to go ahead. I'm going to say goodbye. Thank you so much, and I'm going to turn off the recording. So if anybody has any questions, you can go ahead and stay and ask your question.
Before you do that,
go ahead.
I did write a book on retirement because I know how important it is for entrepreneurs to have a retirement. I will drop the link in or share the link later. It's a best-selling book on Amazon, and I wrote it with other co-authors. And so, how to save for retirement. If you haven't even started, it's okay. You can start now and still have a good retirement when you need to retire.
Yeah, it's that, you know, and I really appreciate that, because a lot of, in the work that I do, working with widows, they may have had a retirement, but then something happens catastrophic in their life, and they've had to use that money to pay for medical bills.
Yes.
Or, you know, their things. So now they're starting over, and they have to rebuild while they're still, like in my age,
Yes.
still raising teenagers at home, and you know, things like that. So that is amazing. If you have the name of your book, or if you have the link that you can put in here,
Yes.
that way it'll save for the recording.
Yeah, small
That would be
business. Okay, growth.
And also for everyone, I really recommend, you know, if these are things that you haven't considered, or that you've been pushing off into like the background, saying, oh, I'll get to that next month, or I'll get to that next week, you know, at least get on a calendar, if not here with Janine, with somebody else, your own tax professional, if you have one, and see what steps that you need to be working towards, so that you can start chipping away. These are all I feel like everything across the board is very important to be checking off on our list as business owners, but we can also become so hyper-focused in trying to work in our business that these are the things, the pieces that can fall away. So we really appreciate all of the time that you spent with us today.
Yes.
And it looks like, oh, you've got your book here. Perfect.
Is there, oh, somebody put it there?
Yeah, it looks like it. Let me just double check if
Oh, yes. Yes.
Oh,
Yes.
yes, we got it. Gorgeous. Oh, I love it. All right. Well, thank you all. I'll see you next month, the first, April 1st, the first Wednesday of every month at 11 a.m. Pacific Standard Time, 2 p.m. Or 1 p.m. Eastern Time. So thank you so much for joining us. And again, if you have any other questions and you want to stick by for a bit, go ahead and you're invited to do that as well. Have a great day.
Thank you.
I already have your Calendly pulled up because as I told you, I have back taxes, and I'm like, do I do the back taxes first, or do I start from today? I don't know how that works either. So
Yeah, so you start
I had an account.
you start with the back first and then move forward. Because any like deductions that, like, say you had a $10,000 loss and part of that can flow over, maybe you can't take all of the loss, so part of it will flow over to the next year. Or if you're depreciating, let's say your car or something, and that's 5 years, so you have 4 years left, and so that will flow over each year. That's why you start with the previous one and then move to the current.
Yeah, it also made me think about charitable deductions. So I was an advocate, or am an advocate for Modern Widows Club, and so we would host monthly meetings, and then with that would come, and also strategy planning with the team of advocates here, like locally in Washington. So we would get together, go to lunch or coffee, figure out what we were going to do for that month's meeting, or and then we would, bring in food and drinks and things like that for to host the meeting, and we had like a monthly meeting cost for the place that we had to rent, the clubhouse that we rented. And so, like, how those fall under deductions, because that was coming out of our personal monies.
Yeah.
So,
Yeah.
wow, a lot. That's why I get scared. You can come, Leah. You can come off of on microphone if you want. Anybody can. Yeah.
Hey, Rachel, this is Preeti. Thank you, Janine. This was
Hi.
very helpful.
You're welcome.
I really enjoyed this session.
You're welcome, Preeti.
Are you going to be sharing the PDF with the list of deductions? Was that part of the session? Or
Yes.
Was that a separate item?
Yes.
Yeah, I think we're going to be either sending it out from us, or Janine's going to send it out to the people who have signed up, which you would obviously be one of them.
Okay,
Sending that out
sounds
for
good.
as well.
Thank you. Yeah, I'll definitely reach out, Janine, and set up time with you. I've been talking to accountants before, but you've shared things in a very different perspective that got me thinking a lot, and I that's what was like super helpful for me from this
good.
session. It is, things I could have been thinking differently. So I appreciate you sparking that in me today.
You're welcome. You're welcome. I'm glad that I can do that for you.
I appreciate it.
Yeah, and that makes me think too, Vicky, it's the same thing for me is, how would I know that I could write off a portion of my house, or if I decided I wanted to buy a house, what would that look like if I could take sessions in like the downstairs being like the business and the upstairs being like our sleeping and living area. How do you know how to even go about doing that if you don't know what the advantages are and what you can and can't do, and
Right.
and how to even take that into consideration. So that's what
Right.
I love, is you sharing those things, like with the family vacation, or the monthly expenses. I had no clue about those things. So
Yes. Let me see if I can.
Janine, just one more question. Sorry, I didn't mean to.
Go ahead. Go ahead.
Please.
no, you're good.
I was going to ask you, I know you said you are out of Ohio.
Mhm.
You may have already answered this question. Are you a CPA? Are you allowed only to practice in a certain state? Can you advise in other states? What's the deal there?
I am not a CPA. I have just been in practice for 25 plus years. I didn't feel um, the need to be technically a CPA, because I can still represent you and help you in the event of an audit or something of that nature. It just, since I was an untraditional college student when I got my accounting degree, and I already had 2 kids, I was working full time. Sitting for the CPA exam would have took another year out of me already being a mom, and already it was already grueling enough going to college and having a 10 and 6 year old, and having to do homework through FaceTime, and making them do their chores through FaceTime. They're like, this isn't fair. Said, you vacuum the floor, make sure the dishes are done, and while I'm at the library in college, and they're at home going through divorce also at the same time because their father didn't want to participate, and so yeah, it just wasn't in my cards to be a CPA.
It's amazing how much you've accomplished, in spite of all those challenges. Kudos to you. I guess my main question was, and you answered it, I guess you can represent your clients during an audit, or you don't have to have a CPA for that, right?
It's you don't have to. A lot of back in the day, it was kind of standard for you to, but now technically no, because I can get a power of attorney form, and that's how I can represent you like that. They made it easier without for you for a tax professional to represent a client instead of just being a CPA.
That's great to know. Thank you.
You're welcome.
And I live in the state of Washington where we don't have state taxes.
Right.
So that kind of just takes that out of the mix. So only focusing on, the federal.
Yes, that's good. Yeah, that's another thing I could have touched on that. States, when you retire, live in a state that doesn't have state taxes. Just decide that. Because that is a savings in itself. That's
In the state of Oregon, they don't have sales tax, so I always thought I should move to somewhere really close to Oregon, but live here without the state tax, but do like my Costco runs and all of that stuff over in Oregon where I don't have to pay the sales tax. Would be great. Get my tires done, all those types of services.
right.
Where it didn't have that to worry about. But wow, thank you so much. And just to double check, so but you can help. Like I could hire you to help. I mean, I don't have complicated taxes. I just don't really know. Like I think the most complicated is on my end of getting together the streams of income. And I like what you were saying about having the separate checking accounts for each type of business that you're doing. Because I've been kind of all over the place. Because it's not like 1 month I'm getting, $10,000, $11,000, and then the next month might be 4,000, 6,000. You know what I mean? And
Right.
so it fluctuates, and I've been like dipping into all pools. I have like my Chime account, I have my credit union account, I've got a business account, and so that part's been a little messy. So to really keep it organized, I guess, is what I'm gonna need to focus on.
Okay.
Making
Yeah.
sure, because sometimes I get paid, like say somebody Venmos me or Cash Apps me. I can't have that go into into my business checking account like as it would if they paid via Stripe. So if they pay Stripe, gets transferred into my business checking. But if it goes into or somebody Zells it to me, they won't Zelle into a business account. It's only personal. So they go into my personal account. And then that's kind of where it stays. And I've been just operating like that. So, and I thought, well, am I supposed to take it out of my personal account or out of my Venmo, put it into my business account, and then pay myself out of my business account. Like, so I'm a little confused about how I should probably be operating that.
Okay, I don't know if I was trying to give her the list, and I don't know, that's not it, I guess. No. Okay, I'll take that down. I was trying to send her a link for the simple business expenses.
I see that. We could even like just expand that and snap a picture of it if that's,
Let's see.
and then it'll come in the email as well.
Yeah, it didn't give me all the pages too either, so I'll just do. I'll just delete it, and then that's it. But yes, you will get a link in the. I'm not able to add it to this chat, Pretty,
Okay.
and you'll get a link.
Sounds great.
I could act, if you have the link, I can actually just turn the recording back on, and then you can drop the link into the chat.
Will that work like that? Wait a minute. Let me see how I add the link. Oops. Do I just copy and paste it? 1 second. I just press share. Share with. Share. Okay, let's see if this works. It's not letting me.
No worries. Whenever you get a chance, that's all right. This was really helpful. Thank you, Janine. Thanks for sticking around.
You're
Thanks,
welcome.
Rachel. Appreciate
You're
it.
welcome.
You both have a wonderful
All right.
day.
All right, you too.
Thanks.
Thank you.
Bye.
Bye.
Bye. All right, bye, Janine. Thank you so much. I appreciate it. I'm going to get on your calendar and see if you can help me form a strategy.
Okay. All right.
Have a good day.
You
Thank
too.
You.
Bye.
Bye-bye.
All right, you all, thank you for watching. When end workday. Hi, everybody. Thank you for watching me. Hi, hi, hi. Thank y'all. Thank y'all. Thank you.